Welcome, ladies and gentlemen. Commodity TV here out of the Cannabis Capital Markets Conference in Frankfurt. And with me here now is one of the most successful companies out of the sector, Neufeld, the CEO of Aphria. And yeah, we want to get an insight into his terrific company. Vic, pleasure to have you here.
Great to be here, and guten Tag.
Yeah, schönen guten Tag. Great to have you. And Aphria, I think you're one of the real success stories of the last, let's call it 4 to 5 years. Maybe you can give our viewers a short overview on the company, 3-4 sentences. What are you doing there?
So we began our journey in the medical platform in Canada 4.5 years ago, and we had a vision. We had a vision of best in class and being a leader in our space. And when you have the type of leadership that we had and continue to grow with, it really makes life easier to really execute on that vision. So we are about a passionate group of individuals, health and wellness. Yes, on October 17th, now recreational in Canada, but up until then, really hitting it out of the park on the medical platform.
Okay, super. As you just mentioned, October the 17th, it was quite interesting because I was driving on the 18th in my car down to South Tyrol to a wedding with my wife. Yeah, and we heard in the radio that Canada was already sold out and people were waiting for hours. And my wife said to me, does that mean now that half Canada is stoned tomorrow, or what's going on? And I said, no, honey, this is very serious what's going on here, because I think this is a new multi-billion-dollar market for the future. And what I actually like with your business is it is not recyclable. Because once used, it's done. So you need to reproduce. So where would you specify Aphria now? As you said, you are one of the market leaders, and just heard already that you are also a leader in the cost structure. Can you give us a bit more details how it works? What costs do you have? What all-in costs do you have? And on what, let's say, gross margins before taxes you are operating then?
So maybe I'll touch on your opening comment as you're driving with your wife. I think what happened on the 17th of October and the 18th is a culmination of short supply and over demand. I have been telling the world that for the first 3 to 4 months, Aphria will not be able to fill the entire supply chain as necessary or as expected by all the provincial regulators. And I was proven right. We had one of our 5 brands in the first 2 hours sold out in British Columbia. In one of our provinces. I think it was less than half a day before all of the Ontario product that we had was sold out. So we're on the cusp of something really big. And what all licensed producers need to do is to make sure their supply chain, their harvest, their processing, packaging, in about 2 or 3 months, we better get our act together, because there's a huge demand. And price points are acceptable today. But back to your other question, in 12 months from now, when I understand the objectives of all of the provincial regulators and the provinces control the price point, we are on average selling into our wholesale pricing about $5 a gram, average blended. So throughout the high and the low, but on average. I'm going to suggest to you that in about 12 months, that wholesale pricing has to be $4 or less. And a very, very important part of what I'm saying here is to meet the #1 objective of both the federal government and all the provinces is to thwart, never eliminate, that's a great objective, but to mitigate organized crime, proceeds that are really driven by organized crime. And the pocketbook will be a major, major indicator of, are they going to be successful or not? So out of the box, average of $9 or $10 a gram when a consumer leaves the store with it after all the taxes, et cetera. I'm going to suggest to you that that has to be closer to $7, maybe $8 out the door. And I don't know how many licensed producers are going to be able to accommodate that objective. And I'll tell you why. My costs today are around $1.10 all in.
So that's real all in.
Real all in. Excuse me. When we have completed our Part 4 expansion and our Aphria Diamond retrofit, we will have 2.5 million square feet of Dutch greenhouse, fully automated, and another 500,000 feet of infrastructure for oil processing, all the R&D, drying, et cetera, et cetera. We will be in May of 2019. Our annualized run rate then will be in excess of 255,000 kilos per year. That's over 20,000 a month. When I get to that level, and again, remember, it's May of 2019, I will have such cost efficiencies that I'm going to pick it up, and I will be a continued leader when it comes to low-cost production. And I'm going to pass that on to all of our provincial partners so that my $5 is $4, and therefore the ultimate selling price out the door. So I have a real competitive advantage. It's because we grow to scale, to quality, greenhouse, low-cost producer.
So you're fully vertical integrated then?
Oh, absolutely fully integrated. Absolutely start to finish. We launched 5 brands in the Canadian marketplace for recreational. Our medical platform continues to deliver. We're in excess of, I think, 55,000 patients now in Canada. The unknown is how many of those patients are going to leave and go to recreational. We'll know in about 3 to 4 months when their scripts are up, and we'll see if they continue to stay with us on the medical side, or do they go over to a recreational retail.
Interesting. I have recently read the cannabis report, or let's say the research from Canaccord, from Haywood, etc., and what they have brought out. So I saw there like peak estimations for the demand of 1 million kilograms per year, let's say by 2020, 2022 around. So if you do 255,000 kilograms already, and I saw the others like the Canopy, etc., they are also coming up with huge volumes. Don't you think there might be then, in let's say in 2 years, a tough oversupply? Or do you think, because on the other hand, from the medical cannabis side, I saw estimations with, let's say, 800,000 patients in Canada by 2025, stuff like that, which will be additional half a million kilograms of usage, So do you think supply, demand, they will be in the balance, or they will be imbalanced through that? Or do you think the medical helps also the recreational and vice versa?
To begin with, and just a quick repeat, I will be producing 255,000 kilos annualized starting in about May of 2019. That's real. If you were to come right now, you would physically see us about 95% complete in all of our construction. We'll be calling in Health Canada probably within the next 10 days for site inspection approval. That's real. And we've been growing in a greenhouse since day one. So what we know we can grow and what I translate by way of press releases is real. I would suggest you have to sit back and really understand some press clippings from some of my colleagues from other licensed producers. If they truly can grow 600,000 kilos annually, what growing problems are they experiencing yesterday and today? And what confidence do they exude that tells the investor they've got their house in order and they will produce? I'm going to strongly suggest that there's an overinflation of what the Canadian licensed producer community will be producing. I can tell you, I'm 255,000 and at an unbelievable attractive cost point. Now, going forward, it would be foolish of me to say that I'm going to have 35% of the recreational market in Canada. There's no one brand. I have 5 brands, but even collectively, if we were able to garner 35% of all retail adult use sales, that would be a home run. There are far too many brands in various provinces. A lot of craft growers that will get shelf presence on their province of residency, but for us to expect that we're going to have such a huge opportunity, no. So our kilos, back to your question, is really a separation between medical as well as recreational. Recreational, though, on October 17th, only included dried flower, pre-rolls, oils, topicals. It did not include a huge revenue, underground consumer revenue today, vape pens, certain infused foods, and beverages. So for us, there's $1 billion of underground revenue that organized crime is now getting called vaporizers, vape pens. Health Canada justice, public safety, they all have to come to the table shortly to realize if they really want to assist licensed producers and the provincial retailers of thwarting organized crime, bring vape pens to the table. Allow me to now bring what we've had ready to rock and roll with for about 8 months now. Let me bring that to the Canadian marketplace. That's $1 billion of revenue that organized crime is getting. What sort of...
Take that away, I would say.
Yeah. Well, but with that now comes higher pricing, premium product, premium positioning, and better from a margin perspective. That's what they need to do going forward. Certain infused foods. I'm not here to advocate gummy bears and brownies and so forth, but I'm saying there are certain elements of wellness that to me is too logical. It's juices, it's recovery drinks, it's utility drinks that allowed to infuse with CBD. I'm not talking about the psychoactive THC here. Yeah. I'm talking about the more of a medical / wellness.
Yes.
If that's the trending now the marketplace really opens up. Now all of the kilos that allegedly are going to be grown by the end of 2019, early 2020. Now there'll be a home for it.
Absolutely. Let's talk about some numbers, because finally you are listed, you are quoted, you have shareholders. Shareholders want to make money, of course. Yeah. So where do you see for 2019 your revenues? Where do you see your EBITDA? And what would you say as a gross profit is possible? And also, like, let's say, where do you think, what is your growth rate for the next 3 years? Your annualized growth rate?
So we don't give guidance to the street for the forthcoming quarter nor years, but I will give you some data points to understand. Our margins reflecting medical in the last 11, 12 quarters is somewhere around 75% gross profit margin. That will continue, except we now have just adopted a new policy that we will absorb for all medical patients that extra $1 excise tax that the government has imposed on not just recreational but also medical. So our margins are probably going to slide to about 65% on medical. On the recreational, we were probably going to be a little bit below 60% margin, only because of the price points. From an EBITDA perspective, we're still shooting for north of 20%. The unknown is the cost of branding. What we know what we want to spend. What's the government going to allow us? Our advertising rules, as you well know, are very, very akin to tobacco and very restrictive. So you got to be creative. You got to go in that social space. But even that is an expenditure of funds that the ROI is not as easy to identify as a radio ad, TV ad, media ad, print. So what we have to understand is 2019 is really a growing year and a learning year for us in terms of how do we continue to support our 5 brands. We have one brand called Broken Coast. It needs no support. It is the #1 premier old culture BC bud grown brand that just sells itself, and it's off the shelf. But we have other brands, Soleil, Riff, Goodfield, Good Supply Company, all hitting different consumer target profiles, all needing some sort of continued awareness. And so when it comes to EBITDA, back to your question now, it's difficult for us to sit here today to understand 2019, our May 31, 2019 year end. How much more do we want to spend on, we've activated the brands, now you have to support it. And a typical launch support is 3 to 6 months. You will understand whether you have reached the right touch points with your consumers in our 5 different categories.
And also you will have a much better market understanding. Yeah, because when this goes on, what happens on after the 17th October, then it's getting really interesting, right? Because more and more countries would follow, because each country loves to have the taxes out of that.
Yes. However, now that we're speaking to the German viewers of your show, let me be the first and maybe the only licensed producer from Canada that will take this posture. I would strongly urge all of your parties to collectively get together and understand socialized medicine cannabis as a natural alternative treatment to chronic condition A, B, C, and D, you need to understand its benefits. You need to understand doctor, patient, pricing, in-country cultivation, which in November you're going to be opening the tendering again, and hopefully Aphria will be one of your in-country cultivators. You need to really understand the social fabric of everything I just said. So I'm hoping in Germany, it took us 4.5 years in Canada to go from medical to including adult use. May not 4.5 years, but give it at least a 2-year runway. Understand the benefits of medical. Get that established. Understand what went wrong, and then improve upon that. So don't rush out and bring a recreational platform to the table like 3 months from now.
Should be first, definitely.
Absolutely.
Yeah.
That's where this started in Canada, and everyone cut our teeth, so to speak, in understanding.
Perfect. Vic, thank you very much. It was a very interesting interview. All the best. And yeah, we look forward to some good news then from you guys 2019.
Oh, stay tuned. There's a lot of good news coming.
Super. Thank you. Yeah, ladies and gentlemen, there was Vic Neufeld, the CEO of Aphria. And you heard him. The company is growing very fast, and the company will already produce next year 255,000 kilograms. And yeah, they have 2.5 million square feet already in planting, and they're highly professionalized, of course. And yeah, you heard it. Maybe they are the first movers here in Germany also. So check out the company. Thanks for watching us. Bye-bye from Frankfurt.
Danke.